rates have dropped. So let's see here. I will pull up mortgage rates quickly down to 2-week lows. So I'll go ahead and read this real quick. After hitting the highest levels in several months last Friday, mortgage rates have fallen fairly quickly in the new week. As bond markets improved this afternoon, many lenders were able to make midday adjustments. That brought the average top-tier 30-year fixed rate down to the lowest level since Thursday, May 18th. Not quite 2 weeks, but close enough. The credit for the rate reversal is multifaceted. The move began in Europe, where friendly inflation data added to an even sharper drop in rates. As is often the case, European rate momentum has an effect on U.S. rate momentum. Traders are also feeling more confident about reentering the market for U.S. Treasuries, the foundation of interest rates in the U.S., as the debt ceiling debate progresses. And that was signed off on last night, right? I believe.
By the House, yeah.
Yeah. If there's one important takeaway, however, it's that the next big move for rates remains up for debate. Upcoming economic reports will set the tone for the Fed meeting in 2 weeks. Several Fed officials commented that they were thinking about, quote, skipping a rate hike at the upcoming meeting. Others have recently said they would like to hike again. Both sides of the debate may change their minds by June 14th, depending on the data. The Fed doesn't directly set mortgage rates, but when a Fed rate hike is hotly debated, the Fed's decision can have a bigger impact than normal. Moreover, the market will be trying to adjust to what it perceives as the Fed's likely course of action based on the outcome of economic reports between now and then. The only surefire bet is for more volatility. It has just happened to be friendly volatility so far this week. So.
Well, that sounds like a little bit of an oxymoron to me, friendly volatility, but I guess it is a reality.
Yeah.
Gosh. So yeah, that's my comment. We're closer to some stability. We talked about this last week. Predictability is a plus. And has long-lasting positive effects. It's the volatility that creates the struggle, the highs and lows. Gosh, it just seems like our world every day gets more and more volatile. But maybe it's just the information they're delivering to us on a consistent basis that exacerbates the perception of volatility. But then it becomes reality because perception is reality. So I looked at it, rates come down because we're moving towards stability and a potential stopping of increases in the Fed funds rate and a sign off on the debt ceiling, which I don't think was dead when they wrote this. But yes, House has approved, Senate is expected to, and certainly the president will sign it. Right. So that should be wrapped up. If we continue this trend, we may be in mid to low sixes within another week or two. If we get another hike or something else spikes, we'll see where that goes. But it was nice to see it turn the corner and come back down. 7 was really scary.
Well, yeah, and what I was worried about, because we set this subject up yesterday, I was like, oh, what happened today? And
right.
the trend continues. So yesterday we were at 7.14, I believe. So we are at 6.85. According to Mortgage News Daily, their survey. Hopefully it's doing better. And you can see here the daily survey here. Yeah, it continued dropping today. Overall good news. We'll see what happens in the next couple weeks.
Right. Look at all those up arrows. Gosh, on that chart. Look how long it was moving up for weeks. But you can recoup all of that in days if there's if stability is expected. So and certainly the stock market is responding like there's some stability in the near future, which has been moving up decently.
Yep. Well, there it is. Just to recap, so 30-year fixed as of today, 6.85. 15-year fixed, 6.23. 30-year jumbo, 6.63. 5/1 ARM 6.88, 30-year FHA 6.5, and 30-year VA 6.51. Now, we just had an Ontario listing, and we got a ton of offers. A good number were FHAs, and would you say I looked at a couple of those rates? Some of those rates were actually pretty darn good, better than the 6.5 that I'm seeing. Is that true?
Well, their rates aren't locked until they
True. True.
get into escrow. I'll start with that. But
Yeah.
yeah, I think Mortgage News Daily is there are rates that are better than what they are posting. This is an average nationally.
Right,
It just
nationally.
seems
Yeah.
okay for us to evaluate it from this perspective without a specific lender twist or
hmm
perception. So, yes, I think the rates are better. They're usually an eighth to even a quarter better than what they're advertising.
Yeah. Yeah. Okay. And then you see there Thursday's rate trend. This is based on mortgage-backed securities are significantly stronger so far today. This strong upward movement in MBS should result in lower mortgages or mortgage rates for today. So
Yeah, and we're seeing at least in our recent a few of our recent listings certainly activity, and could be the price points, it could be the rate shift. But the market's still in this very small pockets of movement. There's conversations about volatility. It's going to fall apart. It's going to go up still. And it does both. We have movements where it's strong and then it backs off. So I think we may be coming off a little bit of a pullback, but we might be moving into some activity again.
Nice. Okay, so that is about how rates have dropped somewhat, and we'll see what the next couple weeks brings, at least right until that June 14th Fed announcement.